In April 2025, the U.S. stock market suffered its worst single-day drop in 5 years. $2 trillion vanished in hours. The cause? Tariffs. President Trump announced sweeping taxes on nearly all imports. 20% on EU goods, 24% on Japan, 34% on China, and 25% on cars. Panic hit Wall Street. Tech giants like Apple and Amazon lost nearly 9% in value. Nike dropped 14%. The shock rippled through every sector. This wasn't just an American crisis. Asian and European markets plunged too. Hong Kong fell 13%, Europe over 4%. The world's interconnected trade system was suddenly under threat. For decades, global trade thrived on open borders. Now the US was building walls, shaking the foundation of the global economy. Investors everywhere realized, making trade harder is bad for business. The message was clear. No country is immune when the world's largest economy changes the rules. The financial earthquake of that day was a warning. In a globalized world, protectionism can trigger chaos far beyond one nation's borders. The aftershocks would be felt for months to come. The world watched, wondering if this was just the beginning of a new era of economic uncertainty. The stakes had never been higher. $2 trillion gone in a day. A stark reminder of how fragile the global economy can be. The question now, what comes next? As markets closed, one thing was certain: nothing would be the same. The world was entering uncharted territory, and everyone from Wall Street to Main Street was bracing for the fallout. Why did tariffs cause such panic? Because today's products are global. Parts come from everywhere, assembled across continents. Tariffs disrupt these supply chains, making every component more expensive. Companies face two bad options: absorb the cost and lose profit, or raise prices and risk losing customers. Either way, profits fall, stock prices drop, and jobs are at risk. Higher costs mean companies may cut hiring or lay off workers. A factory in Ohio could slow down if imported steel jumps 50% in price. The impact is personal. Real people lose jobs, families feel the pain. Experts warn this could trigger a recession, just like high tariffs worsened the Great Depression. The fear, trying to protect American industry, could backfire, hurting workers and shrinking the economy. The lesson from history is clear. Trade barriers can have unintended, far-reaching consequences. As tariffs rise, so does uncertainty. The world's economies are more connected than ever. Disruptions in one country ripple everywhere. The stakes aren't just corporate profits, they're livelihoods. The gamble is enormous. Will tariffs protect jobs or destroy them? The answer will shape the future for millions. The world is watching and waiting. Trade wars aren't just headlines, they hit real businesses. Take Boeing and Ryanair. Ryanair ordered $30 billion in Boeing jets, supporting thousands of US jobs. But as tariffs escalated, Ryanair feared Europe would retaliate, making American planes more expensive and causing delivery delays. The deal nearly collapsed. Ryanair considered canceling, threatening a huge blow to Boeing and its suppliers. Trade uncertainty freezes investment. Companies hesitate, deals stall, economies slow. After tense talks, Boeing reassured Ryanair and the order survived, but just barely. This close call is a warning. Trade barriers put even the strongest business relationships at risk. For every deal saved, others may fall apart, costing jobs and money on both sides. The ripple effects of trade wars are real, immediate, and personal. The Boeing-Ryanair story is just one example. In a world of uncertainty, business as usual is no longer guaranteed. The stakes are higher than ever. America's tariffs didn't just hurt its own economy. They pushed neighbors to rethink their future. Canada and Mexico, longtime partners, are building the Northern Corridor, a $120 billion trade route bypassing the U.S. New ports, railways and roads will let goods flow directly between them and the world, avoiding American borders. This is a strategic shift. Instead of relying on the U.S., they're creating their own trading bloc. If successful, American ports and logistics centers will see less business and U.S. influence will shrink. The U.S. was once the bridge between its neighbors. Now it risks being left out. Canada and Mexico are building new doors, not walls. The economic map of North America is being redrawn. The consequences will last for generations. America's trade policy is forcing its closest allies to look elsewhere. The world is moving on. As the U.S. battles with neighbors, its ties with Europe are fraying. A new deal set tariffs at 15%, lower than first threatened, but still higher than before. Some of the harshest tariffs, like 50% on European steel, remain. Europe is fighting back, forging new partnerships with India and Malaysia. Allies are no longer sure they can rely on the US. For decades, America led global free trade. Now it's building barriers. The world is adapting, finding new friends and new routes. The big question, is this a passing storm or a permanent shift? America's leadership is at risk. Its choices will shape the global economy for years. Will tariffs make the US stronger or more isolated? The final chapter isn't written yet. The world is watching and waiting.